Hello, Warren.
Yeah,
We've had the budget. There was always around a budget, there's rumors, there's stories, there's fear mongering. From a private individual's planning, wealth management, looking at the future, what was important in this budget?
I think what was most important in this budget was what didn't happen. So what didn't happen was we didn't see an increase in income tax rates for high income earners. We didn't see a jump in dividends tax. We didn't see a jump in capital gains tax or estate duty. So I'm hoping that this signals the end of those punitive tax increases on private capital and private individuals. And it would be silly to try and predict what's going to happen in the next budget, but what I would hope is that potentially we see either that it stays stagnant or that it actually starts to come down, that they start to unwind some of these taxes. For this year, it was impossible. There was no room in the budget for them to give us real tax relief. So you'll see, for example, they talk about budget creep or tax creep, and it's all about not giving us an inflation-linked increase in the way that our taxes are deducted. So effectively, we're all going to pay a little bit more tax, but I was quite worried that this could be a scary budget for individual investors, and it certainly wasn't that. The two things that they've mentioned in passing in the budget is that they're going to normalize the way that taxes get deducted from provident fund lump sums. So it's a very technical thing. But at the moment, provident funds on lump sums are treated slightly worse than pension funds and RAs, and they're going to just fix that imbalance. And then they did say, the second point was they did say they're going to do more consultation and more investigation to individuals who are living overseas and working abroad and how they might be taxed in the future. So the deadline for that hasn't changed. It's still March 2020, 1st of March 2020, but hopefully there will be some more fairness in the system that they've got there. So I think for me, that's the kind of personal finance wrap up on the budget. No news in this instance is good news. But on a broader economy, Theo, I mean, this was a tricky budget to do. What were your views for the economy and for investors in general?
Warren, there was nothing scary in the budget. It was the economy is in a difficult space. Fiscal policy is extremely difficult. We're not seeing the growth. Government expenditure is under pressure, and we've got this whole Eskom debacle sitting on the side. So I think given the facts on the table, this is not a populist budget. If anything, it's a very realistic budget. Unfortunately, there's nothing in there that would make one exciting or would say that we're going to see growth or excites any investor. This is a set of facts that was addressed. It was addressed in a rational way, in a structured way. And I do think if you were to say where does the emphasis lie, the emphasis is on fixing the problems in the economy. And at this point, the one problem that can leave this economy in darkness is Eskom. So what the government is saying is they will assist Eskom over a period of time, specifically with a portion of the expenditure to get Eskom right and get it on the right track. From a South African investment point of view, the question has got to be asked, where does this leave rating agencies? Now we have one of the big three agencies that still has South Africa on a investment grade, Moody's, and they're due for an update of their rating at the end of March. They have South Africa on an investment grade with a neutral outlook. The question is, there was nothing positive in terms of growth, in terms of our debt in the budget that would say they would upgrade us. There was absolutely nothing. The question is, the downgrade, will they give us more time? Will it be gradual, that they first just change the outlook to negative and give us another period? Or will they go all the way to a downgrade? My view is that because growth was scaled down, our debt to GDP went up. Eskom is addressed, but it's not fixed. I think the outlook might go to negative. That's priced into the market. None of these numbers took anybody by surprise, and that's why the reaction wasn't surprising in any way. I think the longer term question is, as we try to fix our problems, at what point are we going to say our growth prospects are increasing? Our debt to GDP is getting in the right direction. At what point will that happen? So I would say this is the right building blocks, but on its own, this is not going to fix the South African economy, but it is certainly not populist. It is not the type of budget that increases the state's role in the economy. If anything, it aims toward how are we going to get private money involved in fixing the public problems. It's not there is no quick fix. So I think we are where we are. Nothing surprising. And I do think that hopefully as time progresses, as we fix this stuff with the different commissions, with the economies, with the income and expense, we will start to see better forecasts going forward.